Have you ever wondered how people make money from owning shares or stocks of a company? Is it just by buying at a lower price and then selling at a higher one? Or are there other ways you can actually make money from owning shares? I'm Olivia, your go-to financial analyst. In this channel, I simplify complex financial topics so you can have a clearer understanding and make better investment decisions. In this video, I'm going to talk about the three main ways you can actually earn returns from owning shares of a company: through price appreciation, the different kinds of dividends, and security or stock lending. And at the end of this video, you have a clearer understanding of how to maximize your returns. The first method is through price appreciation. I'm sure we're already familiar with this one. So this is when the price of the company's shares increases. Thereby, the value of your investment would have increased as well, and you earn a profit. For example, if you bought a share of Apple around the beginning of 2024, when the share price of Apple was around $187, by the end of August 2024, you would have earned a profit of $43 because the share price of Apple actually increased to $230 in August 2024. So if you had about 10 shares in Apple, you'd be counting a profit of $430. That sounds good, right? I know. So this price appreciation, it could happen for a number of reasons. It could be because the company has performed well financially and then its intrinsic value would have increased. Or it could be as a result of futuristic expectations investors perceive this company to have, thereby causing the investors to keep buying these shares and then causing the price of those shares to keep increasing, and then you earn a profit. So the law of demand and supply actually play a key role here. However, this profit in question is unrealized until you sell those shares and realize the profits. And this is because the prices of shares can change within seconds. So it's important you bear that in mind when counting your returns. The second way you can earn money from owning shares is through dividends. Dividends are payments that are made by companies to its shareholders or the investors, which is you who own the shares. It's more like letting you take a share or take a part in sharing the profits the company has earned, because indeed it was actually your money that was used in making that profit. But the thing about dividend is that it is not guaranteed. So it depends on two factors, which is the earnings of the company and the board's decisions. So if a company has a good financial year and they've made a lot of money, they could decide to pay out dividends or share this profit back to the investors in the form of dividends. But then the board of the company could decide that they want to reinvest this money back in the business, maybe in new projects or in ventures that could lead to greater gains in the future. That way, in that scenario, they might decide not to pay dividend and you get nothing from the company in that year. But subsequent years, there could be a decision to pay more dividends. It just depends. If a company decides to pay out dividends, there are different ways they can achieve this. They can achieve this through the payment of cash, or what we call cash dividends. And this is the most popular one. So what happens is that the company pays out a certain amount per share to each of its shareholders. So for example, we have Coca-Cola, who recently announced a 48-cent cash dividends. So if you held a Coca-Cola share up until its ex-div date, which was 13th of September 2024, then you should expect your dividend credited to you by 1st of October 2024. And the more shares you have, the more you get. There is also what we call the stock dividends. So in stock dividends, instead of the company giving you cash or giving you money as dividends, they issue you more shares as dividends. And then if you want to sell those shares for cash, you could easily do that and get your money. So this is more like a way of the company retaining its earnings and using the money for other projects, but at the same time giving you something in return as a return on investment. So these are the two major kinds of dividends you can see easily. Now I want to ask, do you prefer cash dividends or stock dividends? If you ask me, I think it depends on the circumstance, but let me know in the comments if you prefer cash or stock dividends and why. Now, let's talk about the third way you can make money through owning shares, which is stock lending or securities lending. I know this term is not so popular, but I will explain. Stock lending is when you allow your brokerage lend out your shares in exchange for interest to other investors like short sellers, who will also return these shares back to you in future. Now, who are these short sellers? These short sellers are investors who are in the business of borrowing shares, selling them now with the intention of buying them back at a cheaper price in future, and also returning them back to whoever the lender is. So when you sign up for a stock lending program with your brokerage, you are allowing them to lend out your shares to these short sellers, who will pay you an interest based on the value of your investment and also return your shares back to you in future. The only issue with this stock lending is that during the lending period, you cannot sell these shares because you lent them out to someone, so you can't sell them. But then you still earn every dividend that the company pays to its investors, so you're not losing out anything. And then the borrower or the short seller will still pay you interest based on the value of your investment and also return your shares back to you in future. So if you are a long-term investor, I think stock lending is something you might actually want to look into. So I know platforms like Trading 212 and Robinhood actually offer stock lending opportunities. So you can also explore that to maximize your earnings. So far, we've learned the three main ways you can earn from shares, which is price appreciation, dividends, and stock lendings. So combining these three methods, you can actually maximize your returns and create a well-rounded investment strategy. But you should bear in mind that when it comes to stocks, nothing is guaranteed. So for example, the prices of the shares can actually decline and not appreciate. The company can decide not to pay dividend for years. And then when it comes to stock lending, you need to evaluate the counterparty risk involved and also consider the fact that you cannot sell these shares during the lending period until the stocks are returned back to you. Aside this, I think you are good to go. Now tell me, when it comes to owning shares, what is the most exciting method of earning for you? Is it the price appreciation or the dividends or the stock lending? Let me know in the comments. Don't forget to like this video and subscribe for more investing tips. Thank you.